Will Budget 2025 bring the bulls back to D Street? Well, that's the question that everyone is asking, and which is why we're going to be finding this out in this special edition on Business Today Television. I'm Sakshi Batra. So what do the Nifty bulls really want from the upcoming budget? What should be investor strategy amidst this upcoming budget in mind as well? We're going to be helping you all understand this with sharp insights coming in from our very special guest who's joining in right on this program. We have with us Mr. Rahul Arora, the CEO at Nirmal Bang Institutional Equities. Warm welcome to you, sir, and thank you so much for taking the time out. It's always a pleasure to speak to you, and especially at a time when the budget is right round the corner. This is when your insights will be extremely important. And this time, I think this budget is going to be slightly different in the context that this time the markets really want to lean onto the budget to find out if the next trigger could help them, come out of this long consolidation of 4 months that we've been seeing. So what do we expect? Should we have big bang expectations this time?
First off, thank you for having me on the show, Sakshi. I think, we're obviously in the midst of a very significant market correction, the kinds that we haven't seen for many, many years. I think it's a very welcome correction, and the budget is coming at a very interesting time. You've just had a new president in the United States.
Yes.
There is some rhetoric that was expected that has already started there. Very interesting move from the US Federal Reserve overnight. Some expectations building up from an RBI rate cut. The RBI has already targeted liquidity not too long back with certain measures. So in the backdrop of all that, I think it makes the timing of the budget a little interesting. I don't know whether the budget has it in itself to significantly alter the course of the markets, actually, but I think no negatives will be taken as a positive. I think we are all aware that something needs to be done dramatically in this country to revive consumption, both at the rural as well as at the urban level. So you have, and we can talk about it as we go along in the show. I mean, there are so many of these schemes that the government has targeted. Let's just hope that they find fruition, because I think if the consumption leg of the economy was to come back in a material way, it would certainly help in the overall growth of the economy. So I'm not sure, like I said, whether it has the legs to alter the short-term course of the market. Let's just hope there are no negatives or no devil in the detail, as we say. But I think if it's a net neutral budget, I think the market might take it positively.
Okay, no negatives will be a positive for the markets for sure this time around. But I want to also understand, we've also entered this new year. In terms of the template, when we talk about the way investors approach the markets right now, the way they navigate their own investments, hedge their positions, is it going to be starkly different from what has taken place in 2024, where the first half was exuberant, resilient, but in the second half, at least in the last 3 months, last quarter particularly, is when we've seen, the momentum getting lost, especially in the mid and the small caps as well. How exactly do you feel the template will be different in 2025 for investors to look at?
So I think, Sakshi, when you talk about taking the whole year into perspective and say, 1 month practically over the balance 11 months, we have to keep in mind that over the last 5 years, there has been a remarkable rally in Nifty. I mean, at the low of the COVID, I think we were somewhere around 7,500. And then we had a move to almost 27,000. So there has been about a 15% or 20% pullback from there. Stocks have corrected even more so. But I think you need to be a little measured and tempered in terms of your return expectations as you go
Yeah.
into the next financial year. The reason I say that is twofold. One is, like I said in my opening answer, Trump has just taken over. I think there's a lot of talk from his side about what he calls "Make America Great Again." So he's obviously looking inward, and he's probably going to have his own version of "Make in India," which will probably be "Make in the US." And he's talking about reviving the manufacturing side of the economy and sort of building it in a very material way. So I wouldn't be too surprised if in the short term you compete with capital flows, foreign capital flows, with the United States. And I think there was a very significant case before this correction started in India. The Chinese valuations started to look a lot more compelling than Indian valuations had. I think our valuations pre this correction, when the Nifty was at 27,000 or thereabouts, were totally out of whack. So I think these are going to be two important global markets where we will be competing for foreign capital flows. In that backdrop, I don't think it's going to be the easiest year to make money. I think the easy phase of the market, like we were discussing a while back, has gone,
Yeah.
where anything that you touched turned to gold. I think you need to, and I think the one very important point, Sakshi, is the last quarter's result season and this quarter's result season affirms one thing, that we are still very much in the midst of an earnings downgrade cycle. I think the
Yes.
disappointment in earnings is far more than the positive surprises that we're getting.
Hmm.
And I worry that in that backdrop, if you have to take a 1 year call, and if you're looking at, say, an earnings growth of, say, 13, 14%, if you're lucky, I think those are the kind of returns at best that you could potentially expect from the market. So I think it'll probably be, a slightly a wide range. If I can give you one on the Nifty, I think, going back to the old highs is going to be very challenging according to me. But I
Okay.
think on the downside, I think most of the short term correction is over. You may get another 5-7% on the Nifty if things go wrong in the budget or otherwise in terms of earnings.
Okay.
But I don't see the Nifty breaking 20,000 on the way down. So we're probably in the last leg of the correction of maybe another 5-10%, if at all.
Hmm.
But like I said, even if I take that point of view, I think going back to the previous highs is going to be extremely challenging. So be a little measured, be a little tempered. It's not going to be that easy to make money. And if you're speaking in January of next year and the index is giving you 10-15%, I think you should take it with both hands.
Okay, well, I'll just follow up question. Do you rule out any chances of entering a bear market or a long winter phase in the markets in that sense then?
So I think, Sakshi, the textbook definition of a bear market is a 20% correction. I
Hmm.
think a lot of stocks have already gone into a bear market by that logic. But no, and the reason I say that is because I think the size of the industry is so large, and I'm not even talking about insurance or AIFs or PMSs or any of that. I'm saying just the domestic mutual fund industry itself on its own is
Hmm.
about 70 lakh crores, and I think if
Yes.
you take close to about 60% of that would be equity. So you're talking about almost 42 lakh crores worth of equity. And, even if you take a 3 to 5% cash position in funds, that's the kind of cash that you're talking about. I mean, if you add off, what insurance AIFs, PMSs have, you're talking about a very large cash pool in the system, which is probably the size of what the mutual fund industry was way back in 2016 before demon. So I think there is enough powder in the system. The other thing that's happened, Sakshi, is that there have been a lot of issues that have come out, public issues. I think in the last
Hmm.
2 years, the spate of IPO. So I think when your money is finite and your inflows are getting a bit predictable in terms of SIPs, you have to allocate within that same, sort of powder that you have, and you may actually sell some existing position to make room for some of these new issues if you
Hmm.
find them compelling. So
Hmm.
I don't think there is a case for a very significant correction, like I said, because a bear market. I don't think. See, all things said and done, Sakshi, I still think the Indian economy will grow at 6%. If it doesn't grow at 6, it'll probably grow at 5, 7, 5, 8. Worst case scenario. I mean, it's an academic discussion, but we'll
Yeah.
still be the one of the fastest growing economies in the world, and
Hmm.
how you can't possibly ignore that, right? So I think the construct does not present itself for a bear market at all. Valuations were ridiculously out of whack. A reality check needed to come in, and it has. And I still think in some cases that reality check is underway. I still don't think prices across the board have become favorable. Yes,
Hmm.
in pockets they certainly have. But yeah, I think, to your specific question, can I see a bear market on the horizon? I really don't think so.
Really don't. Okay, so at least that is a bit of a relief right there. When we talk about the budget again, what could be a deal maker and a deal breaker this time around for the markets? Let me talk about deal breaker first. Do you think any tinkering again with the LTCG and STCG will be something that could spook the markets? I mean, last time we did digest it. This time around, if there is a further uptick on that front, will the markets throw up?
I don't think they'll go down that route again, Sakshi. I think they've tested the waters once. I don't think they will do it again. I think if they are managing to stick to the fiscal deficit number of about 4.5%, that'll be okay. I think if it's higher than that, it'll be a problem. If it's lower than that, I think the street will cheer, to that extent. I don't think she has too much room to tinker on taxes. I mean, the government at the end of the day is making money from our taxes, your and my taxes. Income taxes are the main source of revenue. Corporate taxes aren't really doing, cutting it for them at this point. The maximum growth in taxes is coming from personal income taxes. She could look at providing, I think every year we discuss this, and we have discussed this, I think, since demonetization,
Yeah.
because the bottom of the pyramid has been hurt for the last 8 or 9 years. And you've had one thing after another that's hit the rural economy over the last 8 or 9 years. And the worst of it, of course, was, the unfortunate phase of the lockdown and COVID. But I think there is a case perhaps for a little more relaxation at the bottom of the pyramid in terms of taxation. If you take that 3 lakhs up to about 4.5, maybe even 5 lakhs if you do, it's a revenue loss of about 50,000 crores. I think the government of India could potentially digest that. But
Okay.
apart from that, I don't see them tinkering with too much. I hope they don't, particularly Sakshi, because this has not been a great year for disinvestment, right? I think they had budgeted about 50,000 crores, which is almost what, $6-7 billion, and they managed to do just about $1 billion. So they're about 1/6 of the target. So I think even the government of India, if they decide to go in for disinvestments, they would need a conducive market environment to that effect. And I don't think they'd want to upset the apple cart too much. So like I said, I don't think there's going to be too much that is going to come out of this budget. I just think it's going to be a routine come and go affair. If they surprise us positively and or negatively, we'll deal with it at that point. But like I said, I don't think there's too much by way of taxation that can change either through capital markets or income taxes. At best, maybe at the bottom of the pyramid, a little bit of relaxation in terms of increasing the tax exemption limit.
Okay. Any specific sectors that you think, Rahul, that could be the focus this time around to see increased spending? I mean, last time I think the dampening effect came in for defense because they went in with high hopes and no major announcements were made, and therefore all the defense stocks started to crash. And many of them crashed almost, what, 40-50% from their highs too, and they're still lying somewhere low. What's your sense this time around? Are there going to be any preferred sectors right on top of the government's radar?
See, a lot of people are talking about government expenditure leading the economic recovery. I think our own assessment of our economist and deputy research head is that it will probably grow at about 10%. I think one of the reasons why it is being pegged at 10% is because if you look at the government's expenditure that they have given to the states, our sense is a lot of that has actually gone in for, sort of public sector schemes,
Yeah.
what you would call populist measures. So I don't know how much the center would want to be sort of giving out to the states materially from here. But I think if you look at the announcements that CMI tracks from a capex perspective, year to date it's actually down 30%. And if you look at center, private sector, and central, so states, private sector, and central, they're all down between 20 to 30%. So I think the onus, of course, does lie on the government of India to revive this entire capex cycle. The last couple of years haven't been too good from an awarding perspective from NHAI as well. So I think the one point that you raise of defense, I think Donald Trump has spoken about the world being a slightly quieter place under his tenure. Let's see if that happens. But if you're going to get into a situation where there's not going to be too much conflict in the world, I don't see defense spending going completely out of whack from here. The good part is that our companies already have very strong order books, so they'll continue to execute that. So the good defense companies in India may continue to grow at 15, 20, 25% on private and public sector. But I think it would be interesting to see if they can potentially look at something like a Manrega for the urban sort of sector, Sakshi, because we talk a lot about the rural and the rural poor. There's actually an entire section of urban poor as well that is very employable, but is actually not really employed by the economy at all. And I'm sure when you talk to your friends and family and you see around you, there are a lot of people that don't really want to get into the formal workforce. So
Yeah.
I mean, I can't even tell you how many young people are out there on LinkedIn in that age group of 25 to 30 who are actually becoming not only social media influencers, but they want to manage your social media and, sort of build profiles and do all kinds of funky stuff and getting into podcasts and all that. This is an entire section of the population that's never really going to come into the what you call quote unquote the workforce, so to speak. So something for the urban sort of poor at the bottom of the pyramid in urban India as well would be fairly interesting. But I think there is a case for anything manufacturing related. I think there will still be some announcements of the PLI schemes or the existing PLIs could get a little bit of a tweak. But like I said, I think I would like to see a budget that actually helps revive the consumer staples part of the economy. I think that is extremely critical. And if you basically go with the manufacturing and infrastructure side, it has a residual effect on sectors like cement, cables, steel, aluminum, etc. So I think to that extent, to that effect, I think maybe consumption and defense would be the two areas, and infrastructure where I would look at, in terms of announcements from this government to the next one.
So, have you started shopping already after the recent consolidation has played out, or would you wait till the budget?
No, it would require a very brave man, Sakshi. I don't think we've been having this discussion internally about creating some sort of a model portfolio, but I think of course, like I said, we're thick in the middle of results. I don't think we'd want to take hazard a guess on which way the market will go post the budget. Like I said, hopefully there's nothing negative that comes out, but
Sure.
I always think it's better to buy a stock 15-20% higher if you believe in the story than buy it and see going 20-30% low. That hurts a little bit more. But if you're convinced that the stock can give you a 50% return, even if you buy 15-20% higher, you'll still make 30-35%, but it really hurts if it goes the other way. So uh, let me put it this way, the shopping list is kind of ready. We know what stocks
Okay.
we want to be pushing to our clients.
Hmm.
Some of them have really approached very interesting levels. Some have actually corrected even today as we speak.
Hmm.
So we've definitely zeroed in on what we want to be recommending to our clients, but we'll probably wait. And let's not forget, actually, just a few days after the budget is the first Reserve Bank of India policy under a new
Yes.
RBI governor as well. And like we were discussing a little earlier, there have already been some liquidity measures that have been announced by the Reserve Bank of India.
Hmm.
So let's see if that eventually leads into a 25 basis point rate cut or
Yeah.
not, which is widely anticipated.
Hmm.
So I think the good time to perhaps, in your words, go shopping would probably be, once we've got the event out of the way, maybe Monday would not be a bad time to, sort of start. Uh,
Okay.
and,
So,
and, and there are plenty of opportunities emerging, I can tell you.
okay, plenty of opportunities emerging. Would you be then looking at these rate sensitives, banks, financials, autos, realty? Is that also on the radar when it comes to selecting stocks from the pockets?
So I think Sakshi it's best to be bottom up, but I think if you're taking a top down view right now, I think the one sector that has surprised everyone with its resilience has been consumer discretionary.
Yeah.
I think whether you look at hotels, aviation, alcohol, anything that is high-end consumer discretionary. In fact, even in clothing brands or retail brands, premium is
Yeah.
actually doing pretty well. It is the mass and the bottom of the pyramid. I mean, even something like a Bata will tell you that the hush puppies are selling pretty well, but
Yes.
the flagship Bata is actually not selling that well. So
Hmm.
also, a Relaxo will tell you that their Sparks brand is selling well, but their chappals are really not doing that well. So I think you're seeing that across the board, whichever business you take. So I think consumer discretionary is one place where there has been a lot of strong earnings momentum and may continue to be. But I think you mentioned defense. I think there are names,
Yeah.
like Hindustan Aeronautics, BEML, that are looking interesting. That have seen a bit of correction. I think this entire space of durables and electricals could be very interesting because I'm sitting in Bombay, you're sitting in Delhi. We've had a fairly severe, monsoon season last time around. I believe you guys are having a severe winter. So if climate change is anything to go by, if we have a very heavy summer, it could be a great, sector because I think if you look at a lot of names, of course, some of these may be news based. And some may be result reactions, but I think the entire durables and electrical space has given you, a reasonable amount of correction. Uh, Going back to what we said a little earlier about infra, I think cement could be a good proxy play. Ambuja was a mixed set of numbers, I know, but it does look like an interesting play to us right now. Banks, I'm not entirely sure, Sakshi, because I think there is a risk of credit growth slipping into single digits. I mean, if you look at estimates, they're anywhere between 9 to 12%, and I don't know if you want to be buying banking stocks for that kind of credit growth. There are banks that are still facing some net interest margin pressures. They were deposit rate hikes that were happening in the system not too long back. But I think certain NBFCs could make for interesting plays. I think we like insurance. We like anything that has to do with housing finance. Names like HUDCO. Even small finance banks like AU Small Finance Bank. So I think that is probably what we look at. So maybe defense, cement, certain housing finance companies, consumer discretionary, would be sort of the key themes that we would like to play. And maybe I think on the basis of this result season, two wheelers have done really well. I think if you look at Bajaj and TVS's the results so far. And the last piece, actually, I think is mid cap IT. I think if you look at Persistent, Coforge, Zensar, some of these have reported very, very strong numbers, which are very different from what their parent, or not rather parent, I should say, their bigger peers in the larger IT, universe have reported. So I think that also looks like sort of an interesting space. So there are pockets of value certainly emerging. Some may not be the cheapest because they're showing growth, but some of the stocks and sectors that I mentioned have seen some price corrections, and they can certainly be looked at from a 1 to 2 year perspective on current valuations.
Fair point right there, Rahul. So thanks a lot for sharing with us this basket of stocks and strategies that you're looking at in various pockets. And we do hope that there is no negative news that's out of the budget this time around. And we will be, of course, speaking to you on the budget day and post that as well. And on Monday, we're going to be taking some names from that shopping list of yours as well. And we'll take a sneak peek there too. Thank you so much for being with us. It's always a pleasure to speak to you and get those wonderful insights that you have to share with our viewers always.
Thank you for having me, Sakshi. It was a pleasure. Thank you.
Thank you so much. And with that, viewers, we are wrapping up this special conversation right here. But you stay tuned on to Business Today Television. We are getting you the best of the voices from market experts to help you understand what the budget could really mean for the markets going forward. What is it that you should have as a strategy? The key pockets where they believe the budget's focus could be, and therefore you should not be missing any of those announcements right there. So in case budget is on your mind, then Business Today Television is your one-stop destination. Stay tuned. We're getting you budget conversations from across the board, from economists, stock markets, corporates as well. And we're also getting you earnings conversations and markets coverage that continues. So stay tuned with us on Business Today Television.